MDF.
Good morning. Welcome to Trading Hour. I am Reema Tendulkar. With me are Sonia Shenoy and Pavitra Parekh. And this, girls, is the final trading day of 2022. And while we always look ahead, we make resolutions, we make forecasts, it's also time to take stock of the year that has been. And it's been a kind year for all investors, right? Despite the volatile roller coaster ride the global equity markets had, the Nifty has given a return of 5% for the Indian markets in 2022. We've been talking about India's outperformance, but let's put that into context. In dollar terms, the Nifty has given you a negative return of 5.5%, but that matters more to the foreign investors. It doesn't matter to retail investors like you and me. For us, it's the Nifty return of 5% so far this year. Now, if I have to compare it with what the global indices have done in this year, that's the Asian market picture where it was a tech catastrophe. So NASDAQ was the worst performing index, down close to about 33%, but even Dow Jones was down nearly 10%. European markets were in trouble on the back of the Russia-Ukraine war and fears about growth slowing down, higher gas prices. So across the board, 10 to 20% lost on the key European indices. And in the Asian markets, the bigger knocks came in on Hang Seng in China, though towards in the month of December, we have seen a recovery in these indices from the day's low on the China reopening, but still down close to about 15% Markets like Taiwan, the biggest manufacturer of semiconductor chips, that market was down close to about more than 20% on the back of supply chain issues. Korean markets were down close to about 30%. So in that context, look at us, right? We're the only island of green. And a very resilient performance by us.
Absolutely, very resilient performance, but forget all that, right? I mean, it's New Year's Eve tomorrow. What's the party plan? That's most important. Pavitra looks like she's all set to party with a new look.
This is my new look for 2023. I was just telling Reema, I got so excited that I forgot to wear my lenses.
New year, new me, right?
Yeah, you know.
But this look is suiting you, must say.
And your party plans?
Family and friends.
Okay, as always.
As always, right?
Okay, but I mean, India has also been kind of partying, right? In that sense, the bulls have been. So it's been a good year for our own markets, as we've been telling you, 5% higher. If you look at the key gainers, I mean, if you had invested in banks, especially PSU banks and metal stocks, you'd be a really wealthy and happy investor this year. That's the kind of gains that we've seen. Good returns, 20 to 70% on the Nifty PSU Bank Index. On the losing end, though, IT, pharma and realty were the three sectors that bore the biggest brunt of losses. Specifically IT and then pharma and realty as well, all down about 11%. But if you look at the constituents of gainers this year, you'll notice that consumption was a big takeaway. So the consumption piece has picked up, whether it's ITC, whether it's cars, whether, it's lending. So SBI did really well this year. Eicher Motors was up about 35%. And in the large cap losers, it's of course IT, where there's been huge gashes this year. Wipro, Techem, none of the companies were spared, but you also had other names from the pharmaceutical space, whether it's Divi's, Dr. Reddy's, and even something like a Tata Motors that lost 20% because of the issues that we had in the global market. So this is pretty much the summary of what took place in the year gone by. We have a brand new year starting Monday, but Pavitra, what are you looking at? What was the big takeaway this year?
I mean, the big takeaway, I think, like you guys were just pointing out, was just that India has been so resilient in this, in this backdrop. And of course, so many things were going wrong across the world. So our markets have held. But let's take a look at what you should track moving in, because when we are getting into 2023, we are getting in with a setup where China is finally reopening, after those stringent COVID measures. So we're tracking that closely. Cases are going up, but let's see how the reopening goes over there. We are continuously talking about recession fears in the US. So that is something to track as well. Crude prices have been all over the place, currently around $83, and that is something that is also moving very heavily towards going on in China, and of course the recession talk. So we will watch that closely. We have the auto sales, which will be on Monday. Q3 earnings season is in 2 weeks, and then of course the union budget will hit us on the 1st of Feb. So that is everything that we have to track, getting in at least to the start of 2023. So lots to talk about. But first up, let's talk about the new listing today, the last one of the year. Elin Electronics made a tepid debut on the bourses. The shares listed at $244 a piece on the NSE, which is a small discount to the issue price. Sanjeev Sethia, Director, and Akash Sethia, Head of Strategy at Elin Electronics, join us on the show now. Gentlemen, good morning. Thank you very much for joining us. This is Pavitra, and Sanjeev, let me come across to you first. take us through, I remember the last time that we were speaking, you said that you do plan to grow your revenues, almost double them in the next 2 to 3 years from the current around 1,100 crores that you do have. Your current market share is also around 12%. Can you tell us what is the plan and how you would really expand this in the next 2-3 years?
Yeah, sure. First of all, thank you so much for having us. Our plans going forward includes, expanding our existing product verticals, adding subcategories to that. So probably our fastest growing revenue-wise division would be the new fans division, where we intend to launch a lot of new models, venture out from ceiling fans to table pedestal, axial, fresh air fans, and BLDC fans. So, including the increase the product basket and offer to and add a lot of new customers. In our small appliance division, we intend to increase our sale of mixer grinders, irons, and we want to tap the e-retail business in this category because that's again another fast-growing category. Personal trimmers is another division where we want to expand, and we have very healthy orders. Our third vertical, which will fuel our growth, is the motors division, where we intend to get into new categories and expand our product range and add new customers. So our primary growth is going to be fueled by these three categories. And we are also looking to expand into new categories of small appliances and motors, especially looking at the EV range. So these are some of the businesses which are going to fuel the growth for the next 2 or 3 years.
I think before
I also want to point out that there's a strong China plus.
Sure. No, I just had a follow-up over there, Sanjeev. Also, you had spoken about how you expect to clock in about 2,000 crores of revenues in the next 2 to 3 years. Now that your company is listed, can you tell us a little bit about the targets? Do you hold on to that? And also, this debt-free status, will you be using all of the IPO money to reduce debt?
Yeah, so we hold on to the targets which we set for us, and we believe we will get there. And of course, as far as the IPO money is concerned, we will become debt-free. So definitely we'll become a debt-free company.
Morning, gentlemen. I just want to take our viewers that how over the past 5 decades that Elen Electronics has been in business, the company has constantly been foraying into newer spaces. So in 1973, it was a tape deck mechanism which you used to manufacture for audio cassette players. Let's get that table up for you. In 1977, the company started manufacturing motors as a backward integration. 1999 is when the company started manufacturing small appliances. 2 years later, they got into LED lighting. 6 years later, in 2007, it was manufacturing of flashlights. In 2019, it was manufacturing of fans, as well as medical diagnostic cartridges. Could you give us an indication of, you spoke about some of the new areas that you want to get into in the small appliances space. You want to tap into e-retail. I also heard the word EV thrown in, Mr. Sanjeev, when you were talking about your plans. Could you elaborate a little bit more on how you plan to scale these up? And what would be the projections that you have?
Sure. So I'll first address the EV. Basically we are into the motors is a major business vertical for us. So we are looking at BLDC motors, especially for the 2-wheelers and 3-wheeler category. That's a fast-growing category. Right now, a lot of motors are being imported. And since we are already in BLDC in ceiling fans and mixer grinders, that's a natural extension for us because the technology is already with us. So that's the EV space which we want to come out in. Now, as far as scaling up the business is concerned, the ceiling fan or the fan business has probably just been doubling for us year on year. And here, like I just mentioned, that we are adding new categories. So TPW would be a new category where we already have an order book. And we are looking at maybe revenues of around 70 to 80 crores in the coming fiscal for this category alone. We've got into BLDC fans, which is again another fast-growing sector. Currently, it accounts for almost 5% of the ceiling fan market, and in the coming year, it's expected to double to about 10%. So that's going to be another area which is going to drive our growth. As you know, we have a very healthy background in electronics, also very strong EMS setup. So compared to, let's say, a lot of traditional fan manufacturers, so that gives us a very healthy advantage for the BLDC fan because of our electronics background. Going forward in small appliances, trimmers, we already have a very healthy order, and we are looking to grow that business, with add another 100 crores in our revenue in the coming year or year and a half. Motors, we have launched another category that's for the air conditioning units. It's an outdoor unit motor, and then we are also getting into the IDU, indoor unit motor. So that's also going to lead to a pretty healthy growth for us. So overall, we look to grow at least 20 to 25% in the existing categories. And then I mentioned some new categories which we are looking at. They are allied to our existing businesses. They could include products like, chimneys, ovens, OFR heaters, convectors, kettles. So basically in the small appliance scale. So these are the categories which we look to grow into the future and will fuel our growth.
All right, got that. Let me also bring Akash into the conversation. Akash, hi, thanks for joining us. You were just going through all of these different, your diverse portfolio where you have fans, you have LED lighting, you have all of these hair tools, mixers, grinders, all of that. Could you run us through the kind of margins that you have on some of the larger categories?
Look, I'll just first go, for the margin for the company as a whole. So for the company as a whole, our EBITDA margins have always been in the range of, 7.5, 8 odd percent. Within the overall business, motors and fans have a comparatively higher margin profile as compared to, say, LED lighting or a small appliance portfolio. Also, what is worth pointing out is that when we have a strong focus of growing our ODM business, and within the ODM business, margins in general are anywhere between 100 to 150 basis points higher. And another noteworthy point, is that we've recently entered, the medical diagnostic cartridge segment. Where our EBITDA margin profile is fantastic. It's almost double of, some of our other product verticals. So we have a strong focus to grow that. So all said, hopefully over the next, 2 to 3 years, we not only expect to maintain, but hope to move up in terms of our EBITDA margin profile.
So you said the ODM business, right? The original design manufacture business, where you're expecting to see margins go up by 100 to 150 basis points. So Akash, tell us, in this ODM space itself, I understand that it's gaining quite a bit of traction in India. Brands are collaborating with ODMs on product development. What kind of opportunity do you see over the next 2 to 3 years? What could the quantum be?
Look, I think there are SEBI restrictions on giving out exact numbers, but just qualitatively speaking, what brands are looking for is a one-stop shop solution for them, which is why back in 2018, till that point in time, we were largely predominantly a purely OEM player. We've built out ODM capabilities over the last 3, 4, 5 odd years. And we are seeing excellent traction, in our LED lighting space, in the fans category, as well as some of the appliances that we manufacture. Coincidentally, the fans as a category as a whole is entirely ODM. There is not a single rupee of OEM revenue within that category. And like I mentioned, because of the general trend where, our customers want, a one-stop shop solution, we expect ODM to be a major revenue driver. Also, just one other quick point, we are seeing excellent traction on the e-tail side. So, some of the online players, where they have their private labels, where they intend to procure, appliances under their own private label and sell. We are seeing some excellent traction there also. And we expect that too to be a major source of growth for us in the coming years.
Sanjeev, Akash, thank you very much for joining in. So they are betting on the ODM business, and for the benefit of our viewers, typically contract manufacturers will manufacture the products, but the design has been supplied by their client. But when it's ODM, that's original design manufacturing, companies, the contract manufacturers like Ellen Electronics will not only manufacture, but they will also design the product and the solution. And that enables them to get higher margins. It's been a subdued listing for Ellen Electronics, currently down close to about 6%. And a quick comparison with peers like Dixon as well as Amber. Ellen Electronics, though it has been in business for 53 years, it's much smaller in size. Its revenue base is about 1,100 crore rupees as of FY22, vis-a-vis, say, a Dixon, which is at 10,500 crores, or even an Amber, whose revenue size is more than 4,000 crore. Where Ellen Electronics scores over peers, it's on its higher margins. Valuations too are, if you look at the trailing numbers, FY22, valuations for Ellen Electronics were a little more reasonable compared to peers, trading at about 30 times, while names like Dixon are trading at 140 times, but this is trailing EPS. Get into a break. On the other side, we'll discuss what's buzzing in the commodity space. Manisha Gupta joins in next.
आज तबीयत ठीक नहीं लग रही, तुम ही सब काम निपटा दो ना। अरे टेंशन किस बात की? सेंचुरी एमडीएफ का लो एमिशन प्रीमियम प्लस है ना, हायर डेंसिटी है, वाटर रेजिस्टेंट भी है, यानी ये है जहाँ नो टेंशन वहाँ।
Low emission premium plus by Century ProWood.
Yeah, Ajay, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow. But do we have to wait until his age?
Absolutely not. We recently invested in LIC's new Jeevan Shanti, which gives deferred annuity, which means regular income after some years.
I see.
LIC.
LIC's annuity plans give 10 annuity options and flexibility in receiving regular income. LIC, हर पल आपके साथ.
Why did life test me? Why did it try to crush me, shake me, break me? Why me? Because it knew if I could take this test, I could take anything and say, that was easy.
तुम तो मेरी रोशनी हो।
तेरी रोशनी हूं मैं, किस ना।
Reimagineering brighter futures with smarter steels.
Welcome back. Well, for now, the Bank Nifty is under a tad bit of pressure, but other than that, it's a very quiet market, you'd have to say. A lot of stocks in the insurance space are doing well this morning. So whether it's GIC, New India Assurance, all up in the green. Something like a Manappuram Finance is also up about 3.5%. A lot of PSU banks are doing well. Bank of Maharashtra, UCO, Union, Central Bank, Bank of India are all up in the green, anywhere between 2 to about 4%. That space also looking pretty good. And fertilizers are inching up higher this morning. So NFL is up almost 2.5%, and RCF, FACT are also a couple of other names. In fact, talking about fertilizers, commodities, let's now go across to Manisha Gupta. Manisha, good morning again. What's the one commodity you're looking at today?
Well, I'm looking at the metal prices right now because we seem to be closing this year in the negative for many of those metal prices. You know, we started this year with the first quarter giving us all-time highs to multi-year highs, and then came a correction with demand concerns there. But in the last quarter of this year, there is some buying that we've seen come back yet again. But even with that, we are way off the highs, and we are headed for a negative closing for 2022 there. Well, a couple of reasons clearly have been, one, the recession concerns, the slowdown, the weak economic data that we still continue to see from major consuming countries. And the second has been the aggressive central bank tightening are some of the factors that we are carrying forward in 2023 as well. And then the markets also are looking at the expectation from the currency cues, the rising COVID cases, restrictions from other countries. So there's as much uncertainty that you can see or fathom is what we are entering the new year with. Also take a look at the in China, where the numbers continue to be on the weaker side. The new home sales in this year are down by 30%, but China has done a lot in way of stimulus until now, and expectations that as 2023 begins, there could be some more measures coming in from China. As of now, we have commercial banks extending $162 billion as new credit lines. There have been liquidity injections as well. China also has lifted a ban on equity refinancing for property companies there. And then there also is support in sense of cash numbers there and infrastructure that is going on till 2025 and 27. It is the weak prices from the companies that seems to be putting pressure on their margins as well. So whether it's about Glencore, Alcoa, Norlisk, they have all spoken about lower metal prices and how they're curbing production going forward, especially in the first quarter of 2023 there. If you look at the 2023 itself, the markets do believe that we will start slightly on the weaker side, but by the second half of this next year, you could be looking at demand coming back. Economy is doing well, renewables and EV demand also picking up into the market. Those demand expectations are on the stronger side, so that could perhaps be supportive into the markets. But a report card of what we have done until now in the markets there. So even as we saw all-time highs in case of copper, aluminum and nickel, we are closing this year in the negative for copper and aluminum by 14 to 15%. And for the year, we're down between 20 to 40% for both of these metals there. Nickel did see an all-time high, and we still are 46% on the higher side for the year. But from the highs, we are down by nearly 35% on that as well. And this is what the ferrous metals have done after all that volatility that you saw in this year. We are closing flat for iron ore, and steel is in negative by 11%.
All right, Manisha, thanks a lot for getting us that complete recap on the metal space. But let's also talk about the retail space now. The Retailers Association of India says that India saw sales across sectors grow nearly 20% more than what we saw pre-pandemic. This is for the April to November period. This was led by segments like quick service restaurants, sports, apparel, as well as footwear. So to discuss this in more detail and what trends are looking like now, we have Kumar Rajgopalan, Chief Executive Officer at the Retailers Association of India, joining us now. Mr. Rajgopalan, good morning. Thank you very much for joining us. This is Pavitra. My first question is, yes, from April to November, I understand that we've seen quite an increase, but we also had the festive period at that time. So I'm guessing spending was, much higher at that time. There are a lot of reports that we're getting now that discretionary demand is actually slowing down and that there is some kind of stopping on discretionary consumption. Is that something that you're picking up as well for the December month at least?
Yeah, hi, good morning, Pavitra. I think if you really look at what's happened from April up to November, we can look at it from two parts of the period. One was from April up to the Diwali season, which was pre-October. And there were some trends that were seen wherein there were definitely QSR has been doing quite well. Some amount of work was happening around, or some amount of sales was happening around garments, etc. But really the pickup, like you said, during festival was for definitely garments, for footwear, jewelry, etc. picked up during the festive season. The idea was that the pickup would be much better. However, many retailers found that there is a little bit of headwinds thanks to inflation, and that created issue for at least the lower segment of the population, the lower income segment of the population, where, like you said, discretionary expenditure was not much from their side, but the slightly better middle class and the richer population was definitely spending, and they are still spending on various things. That's what is supported. So that's the two parts that we've seen very clearly. So some of the brands have done very well if they are not necessarily taking care of the lower segment or the lower income categories. The things that really kept well is the sports goods and sports varieties. The QSR has also done well, like you said, about 30%. The garments, etc., has done about 20%. Footwear has picked up quite well in the last 4 months' time. Otherwise, it was a laggard in the first 3 months. The expectation going forward is that this kind of a trend may continue, although the sheer inflation is come to a particular level of standstill. I hope this remains here. It doesn't really go up from here, in which case the the slightly lower middle class population would also join in the expenditure in spending in the country, especially for discretionary products. The other part is about spending on occasions, and that's really seen a good boost, and that's what we are all banking on currently.
Okay. Mr. Rajgopalan, good morning. So can you tell us a little more, give us a little more color on the rural versus urban spending? Also within not just rural, but even tier 3, tier 4 cities, have you seen a pickup? Because we understand that it's sort of a K-shaped recovery where the premium end of the market is doing really well, but rural is still struggling quite a bit.
Yeah, the K-shape is actually kind of K-shapes. I don't know whether we can call it fully K-shaped, because the lower part has come to a particular level and it's constant there. It's not falling, but it's constant. But the higher part of K is definitely there. But that's between rural as well as urban, because it's basically on the income criterion. The other part is about the tier 3, tier 4 cities. Again, we've seen that when it comes to good brands which are taking care of, or brands that's taking care of the upper middle class population, that's done well. And in fact, the tier 2, tier 3 has seen a better recovery there. But the lower segment of the population are not really spending so much. So that worry is there. The rains and all the indications currently has been all good for the rural population. We would expect that first the food and grocery segment would see the biggest amount of let's say expenditure by those consumers there, and then the rest of the discretionary would come in. So we'll have to wait and watch. We hope that the others will join in on this.
You've given us a number that pan-India retail sales for a period between April to November is 19% higher than the pre-pandemic level. Could you break that further into rural versus metro? What was the growth in these individual segments, or tier 1, however you classified it, to give us some more nuance?
Yeah, actually, the tier 3, tier 4, we've got data from tier 3, tier 4 at the most, because that's what we really track, because it's from the modern retail all across, right?
Sure.
The data from them has been that they've actually, especially the brands that have done, that are at the upper end of the segment, where they sell to the slightly better off consumers, has been very, very encouraging. So there they've seen hardly any difference at all. In fact, in some of the tier 3, tier 4 cities, the slightly better, the higher end brands have done very well. But the others have not done so well. But that's been the case even in the cities. But in city, because of the sheer number of population and the number of customers who come in and buy, it looks different. So we don't have any more granularity there, because from whatever we can hear from all the consumers or all the retailers, currently they are not seeing a huge difference between the tier 1, tier 2, tier 3 expenditure from those segment of populations.
All right, Mr. Rajgopalan, we leave it at that today. Thank you very much for joining us and taking us through, what retail demand is really looking like and what it could shape up as we get into the new year as well. So that is the management, that is Retailers Association of India telling us that, we are seeing quite a split once again. What is going on in urban India is that we have seen a big growth, but in maybe the tier 2, tier 3 cities, it is not as sharp as that. It's not falling, but it is quite stagnant. So it will be interesting to see how this pans out with the current inflation setup also that we are facing. So with that, we're going to get into a short break now. But on the other side, we have a trading market, the last one for this year. So we're going to tell you how to trade that with Mitesh Thakkar.
अब ट्रेडिंग में होगा रिदम with ICICI Direct Markets Execution Algos. Just set your instructions and the app will do the trading for you. करो तो ICICI Direct करो. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
ठंडी चाय? हमारे पास बादाम है, किशमिश है, काजू है, अखरोट है. तुम्हारे पास क्या है? मेरे पास सेलो है. गर्मा गर्म चाय.
सेलो वैक्यूम स्टील की थर्मोसील टेक्नोलॉजी रखे गरम को गरम और ठंडे को ठंडा 24 घंटे।
ये ठंडा भी रखता है? ठंडा लस्सी पिएगा?
सेलो वैक्यूम स्टील फ्लास्क रखे गरम या ठंडा 24 घंटे।
Our success reflects your trust. Global business crosses rupees 20 lakh crore. Thank you customers, stakeholders and well-wishers. Canara Bank. Together we can.
उत्तरवीर कमाल दिखा अपना, कभी टेबल बन जाता है तो कभी अलमारी।
वीर MDF आम प्लाईवुड से ज्यादा मजबूत, ज्यादा किफायती, दिखे चकाचक, टिके टकाटक।
You need to remember that when you sign a document, the law presumes that you've read it, understood it, and agree to it. Smart investors always read the fine print before signing any document. They spend time studying its relevance, consider all scenarios and their implications. Follow due diligence before signing any documents, agreements, or contracts with terms and conditions that give brokers or financial advisors the right to act on your behalf. This will only ensure your protection from financial loss and unnecessary hassles in the future.
NSE द्वारा निवेशकों के हित में जारी।
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. It's just a 20-point gain that we are seeing right now for the markets. We have seen, a little bit of a slip in the past few minutes. It is the Nifty Bank where we're seeing some cuts come through. 150 points low on the Nifty Bank. The PSU banks are doing fine, but it is the private banks which are seeing a bit of a cut. So let's see how you should trade this market. Mitesh Thakkar of earningswaves.com joins us now for a technical check. Mitesh, last trading session of the year. How would you look at this one?
One, I think, there was a gap up in the opening and we kind of hit the 21-day exponential average, 20-day moving average and the 12-9 and tapered up from there. So I think today's high becomes an important pivot. I've in fact talked about 18250 as the key level to watch out for. So I think only about that will we go long on the index. Otherwise, in case the selling intensifies in the second half, then I think we'll even explore buying into put options or selling call options on the index. But on stock specific side, metals and other sectors have been doing well. So some of them, IT stocks are giving reversal. So maybe explore long till then, hope that the upside momentum can still see this pullback really expand. So I have a buy on Emphasis with a stop just below levels of 1970 for targets of around 2050 on the upside. And the other stock which I like is Bajaj Finserv. That's a buy with a stop at 1540 for targets of 1610.
Okay, that's on Bajaj Finserv. Mitesh, thanks a lot for that. I wanted your thoughts also on just some, before we let you go, some of the biggest losers this year, which have been the IT names. Any kind of turnaround that you expect in the near term, if not for today, tomorrow, but do you think this is a good time to at least nibble into some of these IT names?
As I said earlier, I think, IT is a sector which is showing some reversal from the lower levels. So I had a buy on Emphasis, but even stocks like Persistent Systems, they are now showing signs that, around 3800 is some strong base being built and some kind of reversal can happen on the upside. What is, of course, not very positive is the fact that the stocks like Infosys or HCL Tech haven't given any kind of significant traction on the upside. So I'm waiting for that. Once that happens, I think then the Nifty IT could gain more momentum.
Mitesh, thank you very much for that. In the last 10 minutes, there's been a further correction coming through in names like Maruti and Tata Motors. Maruti is down 0.3%, while Tata Motors is up 0.9%, but it slipped from the day's high. And you can also see Britannia ticking lower. Along with that, you've got Axis Bank, which has given up a bit of ground. There you have some of those charts where you are seeing a bit of a slide, bit of a profit taking coming through in the last 10 minutes. The Nifty is holding on to the green line by just a smidge, up currently 25 points or up 0.1%. Get into a break. On the other side, we'll discuss the way forward for the markets outlook 2023 with Sampath Reddy of Bajaj Allianz Life Insurance.
श्रीराम फाइनेंस लिमिटेड, आपकी प्रगति का साथी।
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
Sah Polymers Limited. IPO of 1 crore 2 lakh equity shares of face value of 10 rupees each with price band of 61 rupees to 65 rupees per share. Offer opens on Friday, December 30, 2022 and closes on Wednesday, January 4, 2023. For risk factors and details, please refer to the offer document available on the websites of SEBI, Pantomath Capital, the book running lead manager, and the stock exchanges.
देखो 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 नया टीवी देखो ah got the veggies from Chotu's shop. He gives the right rate.
Yes, Papa.
Decided 55-inch TV on this wall.
Oh, super. I'll write out the check tomorrow.
No, you don't. I will with my own money.
Oh, wow. How come?
Look at this advertisement. 30% assured returns on investment. I am also going to invest my money.
So vegetables only from Chotu's shop, but investment advice from anyone? Papa, trusting a stranger's advice is never wise.
But what about the TV?
सोच कर समझ कर इन्वेस्ट कर
Welcome back. The Bajaj twins are now fighting for the bulls. Bajaj Finserv and Bajaj Finance have both rallied 3.5% and 3% respectively. Bajaj Finance is ticking higher as we speak. Remember, Bajaj Finance has had quite a muted year. Year to date, its revenues are down 4%, making it the lowest return for Bajaj Finance in the last 10 years. It's been a solid compounding story, solid wealth generator, but this year, things have gone south for the company, and year-to-date, Bajaj Finance is down 4%. But again, on the last trading day of 2022, it's trying to put in a bit of a fight. Sampath Reddy, the Chief Investment Officer at Bajaj Allianz Life Insurance, now joins in to talk all things market and outlook 2023. Sampath, morning, and thanks so much for joining in.
Hi.
7 consecutive years of gain, and this year we've clocked in a very solid outperformance vis-a-vis the global markets. Does that set us up for, on the negative side as we enter 2023? Because it's hard to have 8 consecutive years of good returns.
Yeah, I think, overall markets have done very well in the last couple of years, and last 3-4 years, as you mentioned, in fact, even in a longer period of time. India has been one of the best performing markets globally. And, thanks to, our very strong macro standpoint, while most of the other countries in the developed world are reeling under very high inflationary pressures, and hence interest rates are moving up, India stands out, one of the standards very well in that backdrop. And also in terms of our GDP growth rate, why still we are one of the best growth that we are seeing vis-a-vis most of the the emerging markets as well as even the developed world. So because of that, we continue to think that India will be one of the best place to invest from the long-term perspective for the equities, and outperformance vis-a-vis most of the other global emerging markets will continue, even though that our valuations today vis-a-vis most of the other emerging markets are slightly on the higher side, but our corporate earnings growth have been very, very strong and robust. Just if you see the last 3 years earnings growth as such, Nifty 50 companies, on an aggregate in FY20, they made a profit of 3.2 trillion rupees. And, FY23, most likely, all of the Nifty 50 companies that together are likely to make 6.8 trillion. This is more than doubling in terms of earnings. So because of, strong profit growth and very good macro environment, I think, India's outperformance will continue. However, the valuations are on the higher side. In last 1 year returns, let's say 2022 returns, just equal Nifty is probably will be ending up with a return of just about 5%. I think this is slightly subdued. We believe that somewhat subdued returns will be there for the next couple of months, or maybe even up to 6 months. If you see the overall interest rates are moving up a lot in the last 1 year. And even though we have come to the end of the rate hiking cycle, but the elevated levels of interest rate will remain for for the next 6 months. It looks like. Because of that, I think the market returns will be subdued for some more period of time. and probably toward the end of the, toward the second half of the 2023, we could see, again, resuming of the bull market in the Indian equities.
In terms of individual sectors, Sampath, what are you looking at? What's the shining star of 2023 going to be? I know it's very hard to do this crystal ball gazing right now, but if you had to put your finger on it, where do your preferences lie?
The banking has done very well in the 2022, and if you look at the current standpoint, the balance sheets of the banking sector is very, very strong. The lenders' balance sheet is very, very strong. Most of the financial companies have got a very solid capital adequacy ratios, and the credit growth is now picking up, and the asset quality has come back to the pretty much, I would say, one of the the peak levels. So overall, the banking sector stands very well for the next year. And pharmaceuticals has been an underperformer for the last calendar year. I think the valuations have corrected in this sector quite meaningfully, and the 2023 could pharma could really it could do well. IT as a sector has done well in the last few years. Maybe 2022 given up some of the gains, but in terms of valuations, even IT sector looks quite good. But largely, the kind of expectation which are there in the developed market in terms of let's say recessionary pressures, I would focus more on the domestic consumption oriented companies for the next calendar year.
Okay, got that. Sampath, good morning and thanks for joining us. We have seen a lot of these smaller themes also pick up, right, this year, whether it's renewable energy, whether it's the EV space, even something like a defense has seen, huge gains. Are there any of these pockets where you find value as well?
Yeah, I think, the EV sector is still emerging. They're just getting into the critical mass in terms of, the news, in terms of vehicle sales. Two-wheeler is achieving, I think, come to almost like about 78% kind of sales, or the two-wheelers are coming from the EV side. I think that's a good sign, and this sector, I think EV segment will will do very well over the period of the next, not just the 2023, but even beyond. So this sector, I think, could be one of the best performing opportunities subsegments.
When you say we should expect subdued returns in 2023, what is it that you expect? Because even this year, in 2022, markets are only up 5%, less than what a fixed deposit would have given you. And it's not tracking the earnings growth that we've seen this year. So to say that next year we will at least grow as much as the earnings growth, because that's what we typically follow, that's not happened this year.
So right, actually, that's what with the interest rates moving up, what happens is that the equity valuation tend to get derated. If you see the the bond market, for instance, whenever the interest rate goes up, the bond prices will come down. Similarly, equity prices are also a function of present value of the future cash flows. Of course, over a longer period of time. So given that interest rates moved up, the valuations got derated. And as we believe that interest rate hiking cycle is coming to the end of, we have come to the end of interest rate hiking cycle, but the rates are not going to come down very soon. Probably they will be there at the elevated level for some more time, before the rates coming down. I think, that's why, for the next, probably 3 to 4 months or even 6 months, market returns could be somewhat subdued because the interest rate will still be elevated level during this period. And towards the second half of 2023, we believe that rates will begin to soften. I think that's when the PE multiples again begin to normalize and even probably expand. So that's why I think the near-term returns will be somewhat subdued, but the full year 2023 could be a good year. And if you see the whole of 2022, we got a very good support from the domestic flows from the equity market perspective. Because interest rates were very, very low levels. For 2023 now, most of the banking sector is offering, fixed deposits of even above 7%. We could see some amount of a competition for the, from the FDs and the other fixed income instruments, from the domestic equity market flows point of view. So because of that, I think, in the first half markets, some more time of subdued return, maybe 3, 4 months or 6 months could be there. But, second half of the 2023, we could see the, stronger recovery in the bull market.
All right, we will leave it at that. Have a great new year. Thanks a lot for joining into the conversation. Let's slip into a quick break. On the other side, we have the management of Skipper to discuss a new order that they've won worth 2570 crores. More on that coming up in a bit.
Imagineering brighter futures with smarter steels.
Got trapped? Do not let commissions and incentives lure you into investing in random schemes. Don't believe in false promises. Be careful. After all, it's your own money.
समझ कर इन्वेस्ट कर
ठंडी चाय हमारे पास बादाम है, किशमिश है, काजू है, अखरोट है। तुम्हारे पास क्या है? मेरे पास सेलो है, गर्मा गर्म चाय।
सेलो वैक्यूम स्टील की थर्मोसील टेक्नोलॉजी रखे गर्म को गर्म और ठंडे को ठंडा 24 घंटे।
ये ठंडा भी रखता है? ठंडा लस्सी पिएगा?
सेलो वैक्यूम स्टील फ्लास्क रखे गर्म या ठंडा 24 घंटे।
Welcome back. As promised, we have the management of Skipper Limited now with us. This maker of telecom and railway structures is gaining in trade after bagging an order worth over 2,500 crores from Bharat Sanchar Nigam. Sharan Bhansal, who's the executive director of Skipper, joins us now to discuss this latest order win as well as the way forward. Sharan, thanks a lot for joining us. Can you tell us, with this latest order that you've got of almost 2,600 crores from BSNL, what does this take your total order book to, and what's the order visibility like over the next 12 to 18 months?
Yes, hi. So with this order win of 2570 crores, our current order book, outstanding order book, approximately stands at 4,600 crores. And the order inflow visibility is quite healthy. We have been broad-basing our product segments as well as our market segments across the globes. So yes, we do have decent visibility of more orders coming in the next few quarters.
I think last time you indicated that you're actively pursuing export projects of 5,400 crore rupees and domestic projects worth 5,100 crore rupees. What would the updated numbers stand? The
bidding pipeline is roughly in the range of 8,000 to 10,000 crores.
Okay.
I do not have the latest breakup between international and domestic because part of the domestic orders have been realized with this new order. But it's still, the bidding pipeline is close to about 8,000 to 10,000 crores, right?
All right. Hi, Sharan. Morning. So that is on, where your order book stands. Can you tell us a little bit about how inquiries from global clients are looking? Is there any kind of change there, when we are talking about a slowdown? Anything that you're picking up in terms of, on the contracts?
Yes, absolutely. Skipper has been working quite actively in the international markets for a number of years now. In the last 4 to 5 years, we've developed a strong base of close to exports to close to about 50 countries worldwide. And we are seeing a lot of push thanks to renewable power generation across the globe, particularly in developed economies like the US, Europe, and Australia. The recent free trade agreement that Indian government has signed with Australia is also a big positive for our company. So we see good opportunities in the power T&D segment thanks to the renewables push by almost all economies around the world.
So these export orders or these orders in other global markets that you're talking about, any visibility that you have in terms of order wins? And which are the geographies from where you see the maximum order wins? What are the kind of margins that you're looking at in this space?
If I talk about export execution, we have seen this year, we expect that out of 400 crores of exports last year, we should be comfortably achieving a growth of about 70 to 75% in the export execution side. On the order book side, exports stand at about 40-45% for us, which I think leave aside this current BSNL order. It will grow to about 50% of the engineering order book.
Sharan, BSNL per se has been in financial trouble, right? It's been loss-making. Any risk of receivables or dues not being paid on time? Is BSNL an existing customer, and do you have any outstanding from them so far? How have they been repaying and paying you money? Is that on track?
We currently do not have much business with BSNL. In the past, whatever business we've done, we've always been paid on time. This particular project is completely funded by USO Fund, which is a 55,000 crore strong fund with the government of India. So there's no payment risk in this particular project. Also, I believe that government of India has a strong and ambitious plan for reviving BSNL, and they've lined up about 1.6 lakh crores of investment in BSNL through various ways. So I do believe that we don't see any significant risk at all in this project, definitely.
All right, got that. We're going to leave it at that today. Thank you very much for joining us and taking us through the outlook there. So that is the management of Skipper talking to us about their order book and how they see the execution in the coming few months and years as well. The stock has done really well. In 1 week, it's up 20%. For the month, it's seen an over 50% up move. That is the stock of Skipper India. But we are going to get into a short break now. You don't go anywhere. There's lots more market action when we come back.
देखो 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 नया टीवी देखो aha got the veggies from Chodu's shop. He gives the right rate.
Yes, Papa.
Decided 55-inch TV on this wall.
Oh, super. I'll write out the check tomorrow.
No, you don't. I will with my own money.
Oh, wow. How come?
Look at this advertisement. 30% assured returns on investment. I am also going to invest my money.
So vegetables only from Chotu's shop, but investment advice from anyone? Papa, trusting a stranger's advice is never wise.
But what about the TV?
सोच कर समझ कर इन्वेस्ट कर
आग को फैलने से रोकना मुश्किल है पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
Making the future truly forward and charting a path towards gender parity.
5 years ago, on diversity, we took up a CSR initiative at Bajaj FinServ to say that, employability in financial services in tier 3, 4 and smaller towns has a big demand-supply gap in terms of availability trained kids. So we started a 100-hour program on technical training for financial services. 70% are girls from low-income families, tier 3, tier 4. 75% of them get jobs, doubling and tripling household incomes. So it's a drop in the ocean, but if each one of us puts in our little drop, this will change.
A mega initiative to make gender parity an attainable reality. HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective.
मेरे पिताजी ने ना ये शेयर्स में भी इन्वेस्टमेंट किया।
PSS को फोन लगाओ। PSS? ये आपके फिजिकल शेयर्स को डिजिटल करते हैं।
PSS फिजिकल शेयर सॉल्यूशन।
जैसा नाम वैसा काम।
Welcome back to Trading Hour on CNBC-TV18. Well, very, very quiet for the market. I guess that's what you would expect in the last day of the year. But let's wrap up on this show. Before that, 2022 has been a game changer for the mobile phone market in India, with Apple betting big on India. So why is the smartphone behemoth eyeing India, and how could this impact the company's exports? Take a look.
The shortest flight from Cupertino in California to Chennai takes about 24 hours and 20 minutes. But despite the long haul, many Apple executives are likely to want to take this flight, with industrial hubs outside of Chennai and Bangalore increasingly playing host to manufacturing iPhones. But before we look at the Apple story in particular, let's look at the broader smartphone manufacturing story here in India. Now, the PLI scheme for mobile phones was amongst the first PLI schemes to be approved and notified by the Indian government. It provided for incentives worth 4 to 6% on incremental sales, and the budget outlay for the incentives was sizable at almost 39,000 crore rupees. Now, the results were quite dramatic. India is now the world's second largest mobile phone manufacturer. The government even estimates that mobile phone production is likely to grow from $30 billion in FY21 to over $130 billion by FY26. In fact, April to June period of 2022 alone saw production of 1.67 lakh crore rupees of phones, which includes exports of over 65,000 crore rupees. Now, a lot of these are very large numbers that we're discussing. However, they are attributable in large part to changes in the supply chain of one single company, that's Cupertino, California-based Apple. Since 2017, Apple has asked 3 Taiwanese contract manufacturers to move to India. That includes Wistron, Foxconn, and Pegatron. But why is Apple now looking at India to begin with? Well, there seems to be a growing realization by Tim Cook and Company that there's heavy dependence on one single geography, and that's China. Recent disturbances in production, courtesy of the zero-COVID policy and the geopolitical tensions, have only strengthened this view. Apple, meanwhile, is increasingly seeking to diversify its manufacturing base to de-risk the supply chain and to make it more resilient. Here, India has been a strong performer. Incentives under PLI have strengthened India's hand. Moreover, the robust production in India, despite 2 waves of COVID, has impressed the iPhone maker. Moreover, Apple is likely to sell over 7 million units in India alone in 2022. But as 2022 draws to a close, these figures are only set to grow from here. FY21, meanwhile, saw exports of 11,000 crore rupees, that's iPhone exports, but April to December period for 2022 alone is likely to see exports of 20,000 crore rupees. Now, looking ahead at 2023 and beyond, Apple is likely to triple its production in India in the next 3 years. In fact, a JP Morgan report estimates that by the end of 2022, Apple would have shifted 5% of iPhone 14 manufacturing to India. As per this report, in fact, Apple will continue to move supply chains to India, and by 2025, 25% of all Apple products will carry the Made in India badge. Now, these estimates are being backed by Taiwan-based contract manufacturers, increasing their exposure to India. Take Foxconn, for example. It has already committed an additional $500 million for expanding production in India. It has also planned to increase its manufacturing, in fact, by increasing the manpower by 4 times to meet the production needs. So what does this mean? Well, to begin with, expect Apple to nudge its contract manufacturers to expand the current facilities and to scale up production. Also expect the contract manufacturers to rope in skilled labor to align with the production cycle of Apple's requirements. And finally, the large engineering pool that India boasts of may also see design, innovation, and R&D functions move to India. But industry watchers do raise a few concerns. Here's number 1. The heavy dependence on China is likely to continue for the foreseeable future, as India still does not manufacture several key components. Second, the value addition that is done in China for smartphones is generally low. In fact, currently it is limited to only about 14%. Number 3, Apple has 120 suppliers for its products. From them, only 12 currently manufacture in the country. And lastly, the timeline for releasing incentives to manufacturing is in fact running behind the curve. So far, only about 460 crore rupees of incentives have been released, with the likes of Samsung still awaiting clarity on their dues. So clearly, Apple for now is betting big on India, but with stiff competition from countries like Vietnam, India will have to stay on its toes to tango with Apple.
Brought to you by